Hello, Facebook friends. My name is Tamara Gurney. I'm the founding president of Mission Valley Bank, and I'm here today with my Chief Credit Officer, Daniel Epstein. And we're going to try our best to answer some of your questions related to the coronavirus and the various loan programs that have been put in place under the Coronavirus Aid, Relief, and Economic Security Act, which is the CARES Act. And under that, there was a couple of loan programs that are now available, and there's a lot of confusion. There hasn't been really good guidance or thorough, complete guidance coming out from the SBA and Treasury. They're working on it. It seems to change almost daily, clarifying things that people are asking about. So today we're going to try to walk you through the programs and then Daniel will spend time talking about the calculations of how you come up with the amount that you want to apply for. So it was signed into law on the 27th. There's $2 trillion actually earmarked for the entire CARES package. There's multiple uses for that money under that program. But on Friday, April 3rd is when the Payroll Protection Program launched. And as it would be, after hours on Thursday the night before, Treasury and SBA came out with updated guidance. So we were all scurrying around the following morning trying to figure out what the program was and some of the key factors of the program. But essentially, it's available to, I'm not going to go through every single constituency that it is available to. You can get that on the SBA.gov website, but generally small businesses, nonprofits, veterans organizations, tribal concerns, independent contractors, sole proprietors, and self-employed, among others. So the maximum loan under payroll protection, it's not payroll, they changed it, it's Paycheck's protection, is $10 million. And by the very name, we should all understand it is really focused in on paycheck protection, so keeping people employed. So the lion's share of the money really needs to be focused in that space. What they're allowing you to do is take up to 250% of your average monthly payroll, and that will be your loan amount. However, they have added some additional covered expenses to that, which are rent, mortgage interest, not your principal, utilities, and some other expenses related to debt that you had obtained prior to February of this year. I don't know if you want to jump in now on what that calculation is, on what the 250% is and what it consists of.
I will. So, hello, Facebook, and hopefully everybody can hear me because we are functioning with one mic. It is not on me, it's on Tamara. So hopefully that you can hear me okay. I've been told I have a pretty loud voice. I will add a couple things very quickly. As of this weekend, they also added faith-based entities and organizations to the eligible pool. So a church, synagogue, mosque can go into the PPP program as well. With respect to the calculation, I'll quickly clarify a couple quick facts versus myths in some very good detail. Eligible payroll costs include payroll and payroll-related costs, insurance paid premiums by the employer, right, health benefit premiums by the employer, and then various type vacations, sick leave, family leave, so forth and so on. What it does not include is amounts paid by a company to a 1099 or a sole prop. The reason why it does not include that is because those entities are going to be able to start applying for their own PPP program that starts tomorrow. And I want to be really clear about that because as early as this morning, I was still on the phone with a company whose advisors are telling them that they can use their 1099, they can add back in the companies that they 1099 or the sole props. That is not the case at all because the SBA set up their own program to borrow under. The other part going into the calculation piece too is one of the permitted uses of the PPP funds is to pay interest on other debt obligations other than your mortgage, commercial mortgage. So you could pay the interest on, I'll use a contractor for example, you could pay interest on your Cat D9 that you just bought. You can pay interest on the Ford F-150 that you just purchased. That money is not part of the forgiveness calculation. And I want to make that really, really clear at this point in time. I say that at this point in time because the SBA could change that overnight as well too. But at this point in time, interest on debt obligations is a permitted use. It is not a forgivable piece. So that if you were to make payments on the Ford F-150 and the Cat D9, those payments would not be part of your forgivable loan at the time that forgiveness is approved. The calculation has gotten simpler now. If you had had this conversation with me over a week ago, I thought it was simple too. So did a lot of banks. So actually did all the third-party payroll processing companies too. But it changed over the weekend, and it changed a little bit during the week to where now effectively, if you have a W-3, we're going to take the number in box number 1, the gross salaries, wages, and so forth, and start with that figure. We're going to add back in premiums paid for health insurance. We're going to add back in retirement fund contributions from the employer. That is the calculation in its simplest sense. There might be other monies added back in. If you are a company that has a union shop, if you can show that some of the monies that are coming out of your employee's check that go to the union are going to be used to help their health and or pensions later on, we're going to add those back in as well too.
I think one thing too to remember is that the cash compensation is capped at $100,000. So let's say you have an employee that makes $150,000. They're only eligible in this calculation for up to $100,000 in either base compensation or incentive bonuses or other cash that they received as part of their payroll. That $100,000 plus the additional benefits that Daniel referenced is capped, so that even if their payroll is $150, they're capped at $100. If they got incentive comp, it doesn't matter. They're capped at $100 at that point. But you can add those other benefit totals to the top of the $100,000. There's been some confusion there as well.
And that's a great point, Tamara. And I'll take it a step further, because a lot of the people that are watching this today are probably a subchapter S corporation or an LLC or something where you might only take a distribution, you might only take a guaranteed payment. If you look at the SBA SOP definition of eligible payroll costs, you will not see either of those words.
Right.
However, we've taken the stance that we're going to cap the guaranteed payment at $100,000. We're going to cap the distribution at $100,000 as well.
Okay, good points. So some of the changes that came out on the to launch the April 3rd date for PPP were beneficial to banks to entice them to get into the program. I think that the SBA and Treasury were hearing that there was so much ambiguity and concern about the risk to banks that many were indicating they weren't going to participate. So the first thing they did is put the entire onus on the borrower. So you will see that the application form that is abbreviated, it's only a couple of pages, it's full of certifications. The borrower certifies that all of this information is correct and accurate. And if the SBA comes back on the back end when you're asking for forgiveness and determines that some of these funds were not used appropriately and they aren't forgiven, that becomes a loan and it is not forgivable, and the bank is not going to have any liability or responsibility for that. We are relying entirely on the borrowers to be accurate and certify that. And the SBA and Treasury also put some pretty big teeth into this to discourage. Their fear is that there will be a lot of fraud in this program of people wanting free money. There was talk as soon as it was signed into law that, oh, this is a grant and I can get, $10 million and I can pay off all my debt and it's forgiven. That's not the case. So the teeth that were put into it are prison time and monetary fines. And the $250,000 is the minimum fine, and $1 million is the maximum. 5 years in prison is the minimum, and 30 years in prison is the maximum. So the message here is, let's not mess around with this. This is where Daniel might say free isn't always free. Be very, very careful about your documentation. Most banks, even though we are not going to be held responsible for inaccuracies and anything that could be fraud related, we still need to check your documents and verify the accuracy before we submit for an SBA guarantee and the funding amount. It's just best business practice to do. But this, again, was added in to entice banks to get into this program and get this money into the hands of small businesses that really need it. So I think that's a critical piece. I'm saying it not with the intention, I'm not trying to scare anybody, but I'm trying to make people understand this is serious business. Let's look at the rules, understand the rules, ask your banker if you don't, and we'll guide you through this and help you get the money that in our hope is 100% fully forgivable. That's really critical.
Tamara, if I could add really quickly,
please.
Not to scare either, but I have seen the backside, the backside of the business part of the disaster loan program. I've seen the backside of the 7A loan program too, and what happens when the SBA thinks that they have a fraud issue. You don't want to go there.
Right.
You don't want to go there at all. Please.
Yeah.
No.
And some of the ineligible, so people need to understand this as well. There are ineligible entities, businesses who cannot apply. For example, one of the most talked about things, at least here in California for the last couple of years, has been marijuana-related businesses. They cannot apply. If you employ household help, a housekeeper or a nanny, that is not eligible under the program. This is a big one. If you have an existing SBA loan and you are delinquent on that loan, 1 month delinquent, and you are disqualified from this program. So that's something to really think about. If there's any way, I know, Daniel, you would say this, if there's any way to scrape together a month's payment and bring yourself current to get 6 months of relief and try to find a light at the end of this tunnel, now's the time to try to find that. But you are ineligible if you are delinquent on a current SBA loan. Yeah. I don't know if there are any of those that I missed, but that's...
No, that was very encompassing, Tamara.
Yeah. So why don't you talk about the 75-25? And there's been, I know you're trying to help people and talk fast, and sometimes we're not very accurate. Okay.
So why don't we step back? We'll take some questions at this point in time.
I'm not seeing questions.
So you have 2 questions here.
Where would I find them?
If you go to the live video.
Live video. I came in after you started talking. Did you say that you believe you can add on top of the 100,000? If so, what items are you speaking about?
So we're talking about salaries, wages, compensation. Every employee is eligible to be counted in the program. Every employee, from using a corporation as an example, from the CEO down to a receptionist, is eligible. The CEO is capped at $100,000. There is no excess amount that you can add back on for the salary, wages, $100,000 calculation. What you can do is there's the part of the payroll cost includes the employer paid health insurance and the employer paid contributions into a retirement fund. But an individual's compensation is effectively capped at $100,000. So if your employee makes $200,000, if you have 5 of those employees that make $200,000 a year, each of them is only going to count for the $100,000.
And then to the point of the question, let's say your health coverage is $200 a month. That $200 can be added back. Yeah. If you are deferring $100 a month into your retirement plan, that can be added on to that $100,000. So your $100,000 can go up by those additional benefits that are eligible. It's just the cash piece, base pay and any incentive compensation. It's just $100,000, that's it, and then add the benefit pieces to the top of that. Hopefully that answered your question.
Even if the employee's part of the majority of their compensation is commissions or tips, they're still capped at $100,000. And I want to be cautious about, because if you watched one of my videos the other day that is on the KHTS website, I wanted to clarify that in the 75-20. The amounts paid into the retirement fund need to be paid. They can't be deferred. They have to actually be contributed in by the employer as well, too.
And
so that was a great question.
Yeah, I'm not sure this is a question, but someone's talking about being listed as a sole proprietor. Again, sole proprietor, self-employed individuals, you're open for starting tomorrow, the 10th, and it's kind of a different, we're looking at your gross receipts, so having a P&L, having your tax returns that identify what you earned so that you can identify an average monthly income, and you, again, can add back those benefit expenses that we discussed that are available to others as well.
And to add on to that as well, the sole props and the independent contractors are going to be capped at $100,000 from a compensation standpoint again also. So once again, if you made more than that in the prior year or in the measurement period that you're using, your wages are still going to be capped at $100,000.
So we have another question. My business, this is from Jesse. My business is entertainment services. I provide MC, DJ services for weddings. My income has come to a complete stop. Can I apply?
So Jesse, it sounds like yes, you can. It sounds like you're a sole prop, so you would be able to apply starting tomorrow.
So we're getting questions about having the application submitted to the bank.
To you.
To me specifically.
Yes.
Since last Thursday.
Yes.
And they want to know when they're going to be funded.
Yes. What position are they in?
Okay, I can't answer that specifically, but I will get back to you with the information we have on the question. We do have a log. It's coming in as they come in. We're logging them in, and as we can complete the underwriting, the review of the documentation you have sent us, and sometimes we need additional documents. When we complete that, then we go to what's called E-Trans, which is the SBA processing system that assigns a loan number, and that's where we access the guarantee on the loan and the loan number, so it's in the SBA system. So we will start reaching back out to people and let them know where they are in the queue, if you will. It was a little cumbersome getting started because there were so many unanswered questions, so we stacked up a lot of applications. We're in the middle of a lot of underwriting, but we're starting to press through on E-Trans, so we're getting those loan numbers. And the next step in the process is once we get a loan number, we will develop a loan document. I think it's 2 or 3 pages, pretty abbreviated. Again, the burden, recourse is on the borrower. We certify that you're giving us accurate information. You DocuSign it, email it back to us. We will board and fund that loan. So we will get back to you with that.
We appreciate your patience also, too. No bank in America was set up for this. We have set up a process here that is starting to flow very, very quickly.
Right.
And so we will get back to you. Thank you.
And Claudia is asking if Mission Valley Bank is doing the Paycheck Protection Program. Yes, we are. We are taking applications from existing customers with banking relationships. We are queuing up a second round, a second tranche, if you will. If at any point in time we are able to take non-customers, we will get that information out as soon as possible. One of the drawbacks to that is the Federal Reserve Bank had not come out with guidance yet on what their program was going to be, and that's the liquidity piece that we need to be able to actually fund loans. There's a misperception in the public that when SBA says we have $350 billion to lend, that banks have this money in-house and can lend it, and that's not the case. We have a finite amount of cash on hand. And we can lend all of that out, but we need to be able to get access to more. And the Federal Reserve came out just late last night with their program on how they're going to make that happen. And it's going to probably take 24 hours to get that up and running. So things will start speeding up. And liquidity, I know I'm back to, banker speak, and we all use acronyms, and I half the time don't know what any of them mean. Liquidity is essentially our cash on hand. In simple terms, customers bring in cash in their deposit accounts. So they have a CD, they have a checking account, and that's cash. We then turn around and lend that money out to borrowers. And so that's where you end up, where you only have a finite amount. If we got, $100 million in deposits tomorrow, we'd have almost all of that to lend out. And you probably have a better explanation of liquidity because mine is very basic.
No, it's pretty good. As you said, depositors bring us money. We then in turn make loans to companies with it. So that would be it in the simplest sense. If I have more cash than loans, I have excess liquidity.
Yeah, or excess cash.
Or excess cash.
Right.
So.
Jesse is asking, how do we submit an application, online or paperwork? I have printed the documents. Do we mail them out or drop them off? We have a resource through our online website where there is a link to a secure system that will transmit your documents to us very quickly and very securely. Just go to info@missionvalleybank.com. You will get a response with that link, and then we have to verify that you are an existing client and that you're an existing client to get in the current queue. We will hold applications or information on others that are asking until we know more about what we can do. Gail is asking, if you're a realtor, would you just take your annual income from last year divided by 12 and apply tomorrow? In essence, yes, that's your average monthly income. If anything, I would caution anyone, if your business model has changed since January, February of this year, I know people that have added employees actually, and so their payroll is higher. You can get your average monthly using all of 2019, but you might be better off to use the February numbers, January, February, and average it for this year if it's going to be a higher number because it'll give you access to more funds.
Right. So there are another very good point. There are two eligible measuring periods for the payroll calculation. One of them is the calendar year for 2019. The other one is the most recent 12 months before you apply. So if you were to apply, if you're a sole proprietor or an independent contractor and you're applying tomorrow, then you could theoretically, use from March 31st going back to March 1st or so of last year.
Yeah.
And if you added more employees too, as Tamara said, that might help you because obviously your average payroll will be higher in certain months, so it would have some weight on your calculation and your maximum loan amount.
They have not given guidance yet for the forgiveness portion because there's so much that is unclear about the lending, the front end of getting the money out there. They've told us that the forgiveness guidance is going to be coming, but we're waiting for that. So I say that because the most important thing, when you spend this money on payroll and other acceptable expenses, you have to show that you have retained the same number of employees and your payroll level is no less than 25% lower than it was before. If you're planning on reducing salaries of an individual, do not reduce more than 25% or you're immediately kicked out. That whole salary is out.
So the 25% might have got wrote out the other day, actually.
Okay.
Effectively, the safest way is when you get the loan, your employee count is 35 and your total payroll is $1 million. Through the 8-week period, through the covered period, actually, it's not just 8 weeks, it's through the end of June 30th, you cannot go below that.
Right.
You can't let go of employees and you can't change their salaries. The forgiveness piece, also, if I can go to the whiteboard, there is one piece on your application that you filled out that's very, very important. It's what we're calling the 75-25 rule. If your loan amount is $500,000, a minimum of 75% has to be spent on payroll and payroll-related costs.
See, I like my $100,000 example. Easier to do the math. $75,000 has to be on payroll.
Okay, we're going to 100,000. I work for Tamara, so that would equal $75,000. A maximum of 25% goes to non-payroll.
Understand you can spend 100% of that 100,000 on payroll if you need to do that.
Right.
I mean, if you have the numbers to, so maybe you're ramping up to reopen your business and you hire 3 new people, pay them, spend 100% on payroll and forget the other expenses, because that's where the SBA is looking for fraud. That's where they're going to look hard to not forgive. If it's payroll, it's clean.
And this is what I want to emphasize, because I did a video, if some of you have watched it, thank you. And I was talking in my mindset, however, some of the interpretations that came out of it is that this was an absolute split, and anything, if you spent more than 75 on payroll, it would not be forgiven, but that's not the case. It's a minimum of 75% on payroll, a maximum of 25% on non-payroll. And so going back to what Tamara said, if you went and spent, I flip-flopped the two, and you spent $25,000 on payroll and $75,000 on non-payroll, then there's $50,000 down here that's not going to get forgiven. And the excess that you spent over the 25%.
And what happens to that?
You are going to have to pay it back. You are going to have to pay it back in a very short period of time, i.e. the 2 years. And I say even shorter, I would say 18 months, because one part of the PPP program is there's an automatic built-in 6-month deferral of full payments. So for the first 6 months of the loan, you don't have to pay anything back. And that includes the piece that's potentially not forgiven. And this is important because you need to look, and Tamara alluded to it a few minutes ago, if you end up having a situation where you think you're not going to hit this, then your loan, a portion of it isn't going to be forgiven. You need to pay it back. You're going to also need to know that your business model can afford to pay it back. And I say that because I've had this conversation with a lot of customers that they are eligible to borrow a large amount, but then their uses, they know where their uses are going to be, and they're not hitting these numbers, or there also is uncertainty in when they're going to be able to reopen their businesses or go back up to full staff, i.e. a restaurant or a hotel, a health club even.
Right.
And I will say this, we have one health club in the portfolio. They, after talking to them about the PPP program, they're taking the economic injury disaster loan. They know that it fits their business model.
Yeah. We have someone asking if we have actually funded any loans yet.
So I believe that we did today, actually, for the first time. If not, I will tell you that it will be happening tomorrow. We have approved, Mission Valley Bank has approved numerous loans over the past 2 or 3 days, and we have gotten that far down into our process. A couple of them have deferred taking their first disbursement or their disbursement of the loan because of some of these conversations. So hopefully that answers that question.
There's another ambiguity in this, in that the SBA guidance says that we must disperse the first disbursement, or if it's going to be fully dispersed in one time, it must be done within 10 days of the loan approval. We're all going back and forth on what's loan approval, and we can make an argument of how we approve loans internally. My position on this is SBA will believe that when you push the button in E-Trans and get a loan number, that's your approval. So as soon as we get a loan number for you, we've got to disperse those funds within 10 days, or it's out of the, I don't know what the repercussions are, they haven't said, but it has to be within 10 days. To your example, if you've got a restaurant and I don't know if I'm going to be open July 1, do I want to make my payroll in April and May, or May and June, and then June 30th the program's over and I'm not open again? I run the risk of my employees, if I get payroll money and I pay them, they can't take unemployment, so they're getting paid by me, the restaurant owner, and then I don't open for business in July, they're back on unemployment. This is a tricky thing, and we're feeling like this program will likely be extended. Opinion, Mission Valley Bank's opinion, not text in SBA. It'll have to go past June 30th. That's not talked about yet, but that's what we're thinking. We do have, Carl has asked, do you expect the feds to fund your bank sometime next week to allow you to expand the amount of loans to businesses currently not using your bank? Mission Valley Bank, like every bank in the country who's in this program and many non-bank lenders, is going to hit that Fed window as soon as it opens, and whether that's today, tonight, tomorrow, and it's going to be chaos. So by next week, I would hope that everyone's moving fast enough that we can get there. But we're working on other alternatives to try to help others. Right now, like most banks that we talk to, we're trying to help our customers first. So that's the highest priority, and if we can get to others, we certainly will.
So I think there was another question that came in. How long does it take for an approval? Speaking again for Mission Valley Bank, we are still, as of about today, worked out the majority of the kinks in our system and realized this came about starting on Thursday afternoon of last week. Moving forward, our goal is to be able to turn these things out. You know, if you're to send in a full application on Monday, we're going to be able to fund you later on that week on a Friday or so. So that's what our goal is, and I think we will be able to hopefully start reaching that within the next couple days.
So Mary has asked, does the cost of payroll include employer payroll taxes and workers' comp for the 75%?
So, very, very good question. It includes payroll and all payroll-related costs, which would include the payroll tax piece. Workers' compensation is not specifically noted in the eligible payroll cost. It also does not come out in, I believe, box 1 on a W-3. So my best guess is that it would not, based on our interpretation.
I think there's there's quite a bit of tax implications in this. There's some forgiveness that's allowable to businesses, but it gets a little complicated in when you qualify. If you're in the PPP program and you take advantage of it, you don't qualify, you give up that ability. These are things I think you need to talk to your CPA about and get clarity around that. I don't know where we are on time, but we did mention the economic disaster injury, economic injury disaster loan, which we call another acronym, EIDL. We are encouraging some of our clients to apply for that. I think the intention was that a number of businesses would apply for that disaster loan, and that is only through the SBA. Banks are not involved in that, and that is not a forgivable loan. So you would apply there. We are told that you would get $10,000 within 3 days. I've heard people say that it's 8 days and they haven't received anything, so, it is what it is. But you get $10,000 totally forgivable even if you're not approved for that loan. So that first $10,000 would be forgivable. And then let's assume you get, $200,000. You can start spending it on all the same things that PPP covers. You can then apply for PPP. However, you have to take your EIDL money and roll it into PPP, and it's likely that that would be the unforgivable piece. Correct. If you take the disaster loan, it is, we went back and forth. I thought it was 10 years. I think Daniel's more accurate. It depends on the size of the loan. It's either 10 years or 30 years that it's amortized.
There's 2 terms. It can be generally a 10-year term or a 30-year term for the most part.
Right. And that is like a 3 3/4% interest rate.
Right. It doesn't quite, they do at a certain level, a certain dollar amount. So EIDL is the economic injury disaster loan. It is the one you most frequently hear about when there is a hurricane or a major flood somewhere or so forth. If you have applied for those, I will ask for you, like Tamara said, SBA administers those directly. Please have some patience because we're hearing from a lot of customers that have said, hey, the $10,000 is supposed to come in 3 days. However, going back to one of the comments we made earlier, the SBA was not set up for this type of disaster because generally it happens in a specific geographic area and they can converge on that area very quickly with personnel. Right. Equipment, so forth and so on.
This is a global disaster.
This is global for the U.S. It's nationwide. So they, I know for a fact, are still hiring people into that program to start underwriting these loans.
We did have a question from Jesse that they just want $10,000. You can still apply through PPP. We have loans as little as 10, 25. 350 is kind of a sweet spot for many businesses that are applying for payroll as well as the other covered expenses. You can apply for $10,000. You can take your chances and apply for the disaster relief, what we're calling our acronym EIDL. That through the SBA on their website, 2-page form, check boxes, sign, certify. You'll get the money in either 3 days, 8 days, or someday. And that's totally forgivable.
So
this is the question.
That's the question. So you applied for it.
You can read it.
You applied for the EIDL 2 weeks ago. The only email you got was to apply for $10,000, but you never got an approval. Going back to what I just said a few minutes ago, I have a feeling that you're not alone. I have heard that the SBA is looking for 20,000 plus people right now to try to get through this process, i.e., going back to what I say, and generally they can get on an area very quickly, literally put people on the ground in physical locations and they cut those checks in that case of a flood. But because this has hit the whole nation, they're having to rethink how they can go about this. They're in the same position a lot of the banks were in that you started off in a reactionary space and they're trying to take their best steps to get forward. Going back to what Tamara said too, if you're even a company, independent contractor, sole prop, go and apply for the PPP for the $10,000.
Okay, I'm not getting any more feed on questions. I don't know if
one more from Gail.
from
How is the SBA $10,000 loan forgivable?
that is the guidance under the economic injury disaster loan. Their guidance under that particular loan program says apply for the amount that you want. So you fill in your application. They're gonna ask you for documentation. It's similar to applying in the SBA 7A program before this disaster. And they have said they will immediately issue $10,000 to you, which is totally forgivable, even if you're declined on the loan. So that was just that's one of the benchmarks, if you will, of that particular program.
Be one from Maria there.
For not-for-profits, I understand, are allowed to apply for the emergency loans due to reduction of services due to COVID and therefore lack of internal funds. Yes.
So not-for-profits can apply for the PPP and the EIDL both. They are eligible.
So, once again, it's the EIDL, the economic injury disaster, covers much of the same expenses: payroll, mortgage interest, rent, utilities. Utilities is your standard electricity, gas, water, sewer. It's not cell phones and internet, and maybe they'll add that later, but we need to tighten it up and not. This is where you run afoul if you and again, it's the borrower. I can't stress enough. It's the borrower certifying this, and if the SBA catches you in a fraud, Daniel can tell you how that plays out because he's been on the other side of that.
I've been on that side. As I said earlier, you don't want to go there. I've worked on the backside, the liquidation piece of the EIDL business loan group. I've worked with the SBA loans for quite a few years. You want to measure, you're probably getting a lot of calls, your CPAs, your attorneys, or other business consultants are probably advising you a lot on their interpretation of these products. The advice I would give to you if you're getting all those calls and so forth is to focus on which product is best for your business model and leave the interpretation of the operating procedures of each loan to both the SBA for the EIDL and to your banker for the PPP.
Yes, I think we have one more question coming in. If people have questions, who do they call? Where someone will actually call back? You call Mission Valley Bank. We my wonderful Roxanne, we call her Roxy at the front switchboard here. She's talked to a number of people, and the common thread of the conversation is, oh my gosh, I'm talking to a real person. And she will get you efficiently to the right person. Obviously, our clients are transferred to their relationship manager that's assigned to them. But reach out to us at 818-394-2300. Roxy will get you where you need to go. Go on the internet, info@missionvalleybank.com. We have a number of people assigned to be looking at that, all day long and picking up those email inquiries, and you will get a response back. If you put your phone number in, we'll call you back, and a human being will talk to you. If you want to do it via email website, we will send you a link to where you can send documents securely.
If that person happened to be one of the close to, I don't know, somewhere between 500 and 1,000 people that either called or emailed me the other week, because I became very popular because my name, my direct line, and my email address are on the SBA website. on behalf of myself and the bank, I apologize for not getting back to you. I was trying to get this process up and running for us to be able, for the bank to be able to make loans. So I guess we have one more question from Jill. Is MVB taking PPP loan applications from non-customers? At this time, we are not. And hopefully, as Tamara said, at some point in the future, we're going to be able to. Your best option right now is go to the existing bank that you have a deposit and or loan relationship with, and they will be able to help you out.
And I would say, and my staff's probably going to shoot me as soon as we get off of this, but we do have a large number of non-clients that applied or tried to apply or at least inquired early on, and they were non-customers. So we do have that data. We have your email address and your name, and we're keeping those records. So if you want to send us an email and say, look, I don't bank there, I would love to come bank there. If you can do a loan down the road, please reach out to me. We will put you on that list. We're trying to explore ways where we can broaden this out, and we're drinking from a fire hose. So we're just trying to keep afloat right now and get our own questions answered so we can be of service to our Mission Valley Bank clients and, and the community at large.
So, yeah. Jill, you're very welcome. And going back, maybe we'll wrap this up to what Tamara said. We incredibly appreciate the support that you're providing to a community bank. We see this as an opportunity, and hopefully certain things will get formed better from a federal standpoint for us to take advantage of that and to take some business from the bigger banks, because we do provide better service.
And I thank you all for listening in, and thank you for your questions. If you find this has been helpful and you still have more questions, please keep sending them in, and we may do this again. And there are other programs. I know there's programs which I probably shouldn't mention, but people with existing SBA loans are supposed to be getting relief for 6 months. There's a lot of misinformation. We don't know where that's going. But as soon as we have more, we will come back to you. So if this is a good forum, let us know, and we'll keep providing information. So thank you for joining in, and thank you for the great questions. And let's all keep following the rules, our physical distancing and hand sanitation. We'll get that curve, down and get out of this and get back to celebrating and sporting events and concerts as soon as we can. We can't do it without being together. We can't do it without